All right, welcome back. Today we got a deep dive on Apple stock. I've mentioned in previous videos that this is a stock that I've started to purchase. And so we'll look at the technicals, we'll look at a little bit on the earnings, and I'll give my bull and bear case, the pros and cons. So let's get into it. We're looking at the stock chart here, and Apple's a beast. If we zoom out even further, it's a pretty unbelievable move that this company has had. So we're on a nice little pullback here. I've got this little green box where I'll be picking up some more shares, but right now I just have a small starter position to keep it on my watch list. But I think in the 160s, 150s, that's a great price. We get down in the 130s, that's a phenomenal price. So if we look at Apple, was the largest company in the world for a long time. It just got passed up by Microsoft. And it wouldn't surprise me if the market says, Nvidia, let's pass Apple and see what's next. So we'll see. For Nvidia to pass Apple, that would be pretty unbelievable. But crazier things have happened. So, Apple was 3 trillion not too long ago, number one. It slid to number two. It wouldn't surprise me if it slides to number three. And that's exactly why I think this is an opportunity, because I don't know if Apple will reclaim number one soon, but it wouldn't surprise me if a few years from now Apple's back at number one. So, so let's get into the pros and the cons, and then I got some charts to kind of have some visuals to go along with what I'm saying here. So these are my opinions here. On the pros is the iPhone dominance. Everyone loves the iPhone. It's a very dominant product, and you'll see in their earnings that's their big cash cow. Their services is also growing. For your iPhone, you pay for insurance, you pay for Apple Music, you pay for all those add-ons that Apple has in their ecosystem. So they give you the device, and then they add on all those other reoccurring services. You've got the App Store; they get a cut of all of those. So that is continuing to grow, as well as their streaming, Apple TV, sports growth. I know that they've made strategic partnerships with, I think, the MLS, and they're possibly working with the MLB, and then coming up soon we'll have the NBA contract up for grabs. They might be able to get a piece of that. So that's interesting as well. So I think that's going to continue to grow. The wearables, you've got the AirPods, the Apple Watch, all of those things. And when it comes to health, I know, especially with the Apple Watch, I think you could see Apple branch out into some more wearable health technology, like a continuous glucose monitor and things like that. One thing that I really like with Apple is they switched from Intel chips to making their own chips, designing. So they still don't manufacture them. They send that out to Taiwan Semi, but they say, hey, instead of Intel designing and making our chips for our phones, we know what we need. We know what's best for our devices. We're going to design them, and we're going to cut out the middleman. So that took a lot of business away from Intel, but it's great that they're designing their own chips. And from what I can see, their chips are very, very good, very high performance. And that'll continue. So they're going to keep making their own vertical integrated products for themselves, which is great. Free cash flow, they have a very nice profit margin. And for that, they have a lot of cash. The other service on here is Apple Pay. So I don't know if you've ever looked at PayPal, Cash App, things like that, those fintech stocks. They're kind of getting beat up, and a lot of the fear for those companies is that Apple Pay is going to just wipe them out. So we'll see. I've used Apple Pay a couple times just because people send me money. I've never even taken money out of it, so I don't really use it that much, but it is convenient to where you can send money similar to a text or even in your text from Apple to Apple device. So that's interesting. So we'll see if that continues to grow at the clip that it is. So we'll see there. Now let's get into some of the cons. Some of the cons here is it is a cash cow. Now that doesn't sound like a bad thing, but what that means is that it's no longer a big growth company. It's more of just a cash cow. So they're not growing. They're not spending all this money to grow. They're just kind of milking things. So, and that kind of brings up our next point here: lack of big new products and innovation. The iPhone is the same now that it was 2 or 3 years ago. There's no different besides they come out with a purple one or an orange one, or it's got a third eye camera or whatever. There's not a huge difference in those phones. So they're kind of, to me, it seems like they're milking it until they come out with the next big thing. But that's the way Apple does things. They go slow, and they focus on quality over quantity. So that to me is a con. I do think that they can come out with some newer, cooler stuff, like the VR headset. That is interesting, and I think that's a potential catalyst that we'll talk about in a minute. But besides that, when it comes to cell phones and iPads and computers, it's all the same thing. There's just minor upgrades year over year, and so to me that's a con. And then we've got their App Store. So this is a con. There a lot of litigation over their App Store. So if I have an app and I have it on the App Store and people do in-app purchases, I have to give 30% of that to Apple. Now that is quite the monopoly, and it's not quite fair to developers and app builders. And they're starting to push back against that 30% cut that Apple is requesting or requiring. So a lot more will come out about this as they're going through the court cases, and more people say, you know what, we're going to pull our app from the App Store, and we're going to just focus on Android. Now that's kind of not good for their business, but also they don't want to deal with that 30% fee that Apple requires. So I think that monopoly will start to go away, and that'll eat at their profits a little bit. But we'll have to wait and see how that goes. So to me, that's a con. That's something that needs to get worked out. Now, catalysts that we're looking out for. Apple can change the game if they come out with a nice AI SIRI. I think their new version is called Maggie, something like that. But if Siri could actually work and be an AI agent on your phone, I think that would be a huge upgrade. And they could even say, you can't do that over a software update. Make people go buy the new phones that has this capability in it. That would force a lot of people to say, all right, time to go upgrade cell phones, laptops, iPads, all that stuff. Even AirPods, if you could have AI built into AirPods, there's just so much that they can do there. They have all the devices, they have the ecosystems. If they can just upgrade all the software with AI capabilities, that's going to be huge. So they haven't done anything. They haven't announced anything. They barely started talking about it. When they get the ball rolling there, and when people can see that and feel that, I think that's going to be a huge catalyst for the company. So we'll have to wait and see until that day comes. The Apple Vision adoption, version 2. Right now, it seems like that thing's too big, too clunky. It's too much, too expensive. But if you look at Meta and how their Ray-Bans, people are responding to their glasses, I think that shows where Apple should be going. They need to go to a smaller, lighter device to where you're not so isolated and have this big thing on your head. It just, if my AirPods have a little camera, or if they have a mic where I can have it do a lot of things for me, that would be great. So I think that's where they'll start, is possibly the AirPods as a wearable AI device. And then hopefully they can get the Apple Vision into a more of a glasses type device. Apple's got a ton of cash, and Apple hasn't been a huge proponent of acquisitions. It would be a pretty good idea, in my opinion, for them to look around and say, okay, what company can we go acquire and build off of what they're doing? So there was a lot of rumors of Apple buying Disney, of Apple buying Peloton back in the day. Tesla tried to sell themselves to Apple. Something like that would be super interesting if they can take a bunch of their cash and say, we're going to go buy a company and bring it in-house and make their product the Apple way. So if they really turn into the cash cow and growth is slowing, they can grow by acquisition. They have the cash to do it. The only problem could be the regulators. So the regulators might say, nope, you can't do that. We don't want you to buy this company because it'll be anti-competitive. So those are the things I'm looking for. And again, the iPhones, all those things are still going to be there. Apple's not going anywhere. It's a wonderful, wonderful business, and they make great products, and people love them. So let's get into some visuals here so you can see. So this is their most recent earnings flow. So you can see iPhone, $70 billion. Computers, MacBooks, $8 billion. iPad, $8 billion. And their devices, small ones, watch, AirPods, $12 billion. That's pretty crazy. So just for their, AirPods, Apple TV, accessories, $12 billion. And then you have their services at $23 billion. So that's a lot of money for just their services. Let's see here. So they're another chart on their breakdown. Again, this is quarter over quarter. So you can see the dominant, workhorse here is the iPhone. And I don't see that going anywhere. And again, if they can make some substantial upgrades, I think the 13 or something. I don't know. I don't even know what we're on, 15. And I have no need to upgrade unless I break my phone or if it starts acting slow or the battery. So once they have a need for people to upgrade, then you're going to see a lot of people come out of the woodwork and say, all right, give me that AI iPhone. And this is a pretty unreal chart here. So this is just the Apple services compared to these 5 companies in revenue. So just Apple in their services alone generates more revenue than Netflix, MasterCard, Spotify, EA Sports, Peloton, New York Times, Dropbox, all those companies combined. So that's a pretty neat visual. And that's, again, this small piece of Apple's business is bigger than these handful of companies, and that is a small piece of Apple's business. So that's pretty neat. So that's our deep dive into Apple stock. So again, this is a small piece of the portfolio, and this is in place of me adding more to the Qs. So the Qs is at all-time highs. Instead of adding up here at all-time highs, I want to wait for a pullback to be more aggressively adding to the Qs. And so instead of that, right now, I'm saying, you know what? I'm going to start a position in Apple, which is a component of the Qs, but is not at all-time highs. Now, when we get the pullback in the Qs, Apple will probably go lower, and that's okay because it's a starter position. I'm wanting to add more, and I believe in this company long-term. We all know Apple. So that is my thesis on the company. If you have any questions, put them down in the comments. If you like this video, hit the like button. I will be releasing my thesis and pros and cons on Google, so look out for that video down below. Until then, have a great day. Peace out.